Jack Scoville is joining us today with the Jerry Gidel's weekly commentary on Connected Farmer to talk about many of the market issues that impacted the Chicago Mercantile Exchange this week, right here on Connected Farmer, your channel to keep you up to date with the latest trends in agriculture and livestock. So, as I said at the beginning, we have Jack Scoville today joining the Jerry Gidel's weekly commentary, and he is with the Price Features Group in Chicago. And we are going to talk about many things, including the tax cuts in Argentina, the Trump tariffs, and also the USDA's cattle on feed report. So, Jack, I would like to start with you about some tax reductions announced by the Argentinian government this week. It's a temporary reduction of taxes for soybeans, corn, and other related grains such as sorghum and barley. So, what do you feel? How do you think this has impacted the markets this week?
Well, the news came out on Thursday afternoon, and so the real impact of any of this change came Friday, today, as a matter of fact. And you could see some lower markets, especially in the nearby for the soybeans. Not so much the corn, but definitely for the soybeans. And the reason is because everybody's worried about soybean offers from South America anyway, and the weather had something to do with that as well. But certainly, the decrease in taxes in Argentina makes soybeans there that much cheaper, and that does impact the U.S. trade. And so we've seen prices under some pressure here today, and we could see some price pressure again next week.
Yes, and another issue in South America is the dryness in Argentina that can turn things around.
Well, in fact, the weather has changed down there. We saw reports today of some really good rains down there yesterday, and the forecasts are for improved rains to continue. Eventually, getting just about all the Argentine production areas. Right now, they're in the west and the north, but it's eventually spreading down into southern areas and eastern areas, and really giving those crops, both corn and soybeans, a badly needed drink of water, probably in time. If this dryness had gone another couple of weeks, it would have been very stressful for the crops indeed. But for right now, even though they are stressed, there's still a chance to recoup a vast majority of the production potential for Argentina. And this is true for southern Brazil as well. It's been dry there as well, and they're getting good rains as well. So the situation is taking a turn. On the other hand, up in central and northern Brazil, it's been very wet up there, and they're going to start drying down. The rains are shifting south, and that's causing a change in the weather patterns to wetter southern Brazil, Argentina, drier central and northern Brazil. That allows the central and northern farmers to really step up the harvest. And as they do step up the harvest, we should see the beans start to hit port in March, or April for sure, but definitely, probably by the tail end of March. And also allow the corn crop to get planted reasonably on time. The harvest has been delayed about a week or two in central and northern Brazil, but they'll have a chance to catch up now, and that should allow them to get the corn crop in reasonably on time and allow for a good winter corn crop production here this year as well.
Well, and Jerry, you have looked at the cattle on feed report. We had a report this week. What's your highlight about the report?
Well, we came in with very, very strong cattle prices going into this report, with the expectations that our placements would be about 100% and marketing's be about 101%. And that, but it turns up that there was a little profit taking today ahead of the report. But overall, the numbers that came through here with placements were only 97% of normal instead of 100%. And marketings were still in the 101% level. So the $200 beef prices that's been quoted this week doesn't look like that's going to back off much. And seasonally, between now and April, this is usually the time of year when we have a kind of a firm beef market, and that as we kind of hit the low end of our supplies in the feed yards. So today's cattle on feed report uh, wasn't something to uh, suggest that we've got a lot of lower prices ahead of us here at the meat counter here in the U.S.
Yes, and this week we also have had the Trump tariffs announcements with, I think we can say a tentative date because there is a date that was announced for roughly it's next week that the tariffs will take place for Mexico, Canada, and China. So the impact on the agricultural commodities is huge. I want to start by you, Jack. What do you assess of?
Well, not only are those three countries going to be affected, but just everybody's going to get a tariff, I think. And they're supposed to start February 1st, so the date is coming very quickly here. And I feel like it's a negative for row crop prices. Just the tariff makes it that much more costly for the importer to buy. So either he's already bought, which I think is true because of the strong export sales we've seen until date, or he's going to look for lower price. He's going to look for lower prices from the farmer to help offset that tariff. So if you have a 10% tariff, you can expect to see something come approaching a 10% drop in prices here. It doesn't have to be guaranteed, but I suspect that's going to be one of the effects of the tariff, and also it's going to make it that much more costly for a lot of producers here in the U.S. To buy some of the equipment that they've been buying, because a lot of the equipment is, even if it is built here, is built with some foreign parts, and those parts, of course, are going to be tariffed.
Yes, and Jerry, you have anticipated on none of your interviews here that at the end, the U.S. government would be paying as for the U.S. farmer to compensate these tariffs, and there was already an announcement by the U.S. government on that matter. So, what can you add about this situation?
Well, the connection of tariffs and the previous Trump administration here 4 years ago, and that his approach was to utilize the tariff money he got from China and other places, and utilize it to pay farmers for the reduced export sales situation as they occurred. That really wasn't point out there from Trump until it really showed up here as we were seeing the uh, Senate confirmation to Senate confirmation session that was in going on yesterday when they were interviewing the new potential Secretary of Agriculture here, Brooke Rollins, and that. And her previous connections at a think tank back 10 years or so ago really was maybe not as strong of a advocate for agriculture in the Midwest, at least, as it might have been in other places. She is originally from Texas and that, but at her confirmation hearings yesterday, she did suggest that if something like the issues with China and that type of thing what dragged on, that there would be a possibility of some type of support to farmers on that issue, and that the tariff situation. She said that that's part of the administration's approach on strengthening U.S. agricultural exports. We'll see if that it turns out to be the case or not. Also, her previous support for biofuels and ethanol was not the strongest back in 2012, but she's on board now. And then I think the most interesting twist on this whole thing is in the scenario of the administration right now is involving their really strong attitude about deportation of and that definitely there's ideas that they would just have taking back the 4 or 5 million people has come across in the last 4 or 5 years type situation. Everyone's going back, but I kind of wonder if things might have softened a little bit and only looking at the bad apples, if you will, that might have come across. And there was some, there's no doubt, and to some extent, they did quiz her hard about, the California uh, program that's really been going on for years about migratory workers coming in for the harvest and things like that. And she did say that that's an important factor. And now all of a sudden, the other big factor in this thing, we had a lot of raids on packing plants back 4 or 5 years ago, and that's another issue that pops up in this thing. So I'm not sure how that's all going to end up getting sorted out and how that works out along the way. And then, of course, we've got the general optimism about agricultural trade being the positive thing that's going to keep our prices up. And to some extent, the rally we've had since last fall, we've had a pretty good and strong exports on corn. Beans have maybe been a little shaggy versus expectations, or it could have been, but still, both of them have firmed up because of the fact that the world's looking at these inexpensive prices. And I think there was a possibility, particularly in the last 2 or 3 months, of some people deciding to go ahead and getting some supplies on hand. We actually had 1 million metric tons of sales, 880,000, I think it was, to China and 120,000 to Mexico. There's two particular current people in the crosshairs here of Trump's export tariffs he's put together. So it's an interesting situation here on how this is all going to get worked out along the way. To some extent, some of the commentary about the 25% scenarios in both Canada and Mexico came out real quickly. There for a while, there wasn't even an idea that maybe there wasn't going to end up being a 10% thing, but there tariff on China. To some extent, I think that's going to be interesting. Even some commentary on the internet that maybe things on this February 1st date might not be as solid as we think it is, but definitely it doesn't help our demand if we've got particularly Mexico and Canada and even probably Europe and other places being threatened with tariffs. Doesn't improve our exports in the short term. Maybe it will in the long term, but in the short term, it's not a positive for the U.S. agriculture as we go into the spring of 2025.
So, Jack, we will have next week a week to digest all of it, and many things can happen in that time frame. How do you see the market starting on Monday?
I think we could be lower. I think once people think about this, they're going to realize, first of all, that the situation is improving down in South America, and that soybeans will be coming sooner rather than later to the market. And I think that's a negative. And I think once people figure out exactly how this tariff deal is going to work, I don't see that there's a positive in the short term in that as well. So I expect to see a little follow through selling. It does the corn market acting a little bit toppy in here today after a real strong day yesterday. Did not close particularly well, and certainly didn't follow through to the upside today. And soybeans kind of the same way. So I'm thinking that we could have some lower markets. I could always be wrong, but I'm thinking that that's what's going to happen.
Jerry, what do you think?
Well, the general idea of where we're at early next week, definitely on the lower side is a possibility. South American weather, what comes through, doesn't come through, is going to be a big factor for us. But to some extent, we've had quite a push here. We got just up under $5 on the spot March corn. Beans just got over the previous highs and haven't been able to get a lot of push through at this thing. No, I've been encouraging people on this rally to be 65% sold, and I think that's still a proper approach here at this point, from the standpoint of producers here in the U.S. To some extent, the uh, the next few weeks in here, seasonally at least, we're going to get a lot more news out of South America, how much the harvest is progressing along. Right now, that has been a positive for us, but as Jack points out here, I think the weather is starting to moderate in the north, and Argentina is getting some rain, so that's exactly what's a positive for South America's output, and also getting their harvest in Brazil.
Well, despite the fact that Jack joined us, we had a shorter episode today.
Well, we can keep
So,
going if you want. I would also, I do have one other thing I wanted to point out, and that is what's going on in the cash market here in the U.S. And what's going on is basis levels are leaking south. Um, as futures have rallied, the basis is taken away a good part of that rally. And the reason I'm picking up is that the farmer has, in fact, been selling the rally. So farmers are getting sold on this rally, and that's probably a good way to be. You know, you don't have to be 100% sold, but you should be, as Jerry suggested, over halfway sold, especially at current levels. And given the fact that it does look like we're not going to have any shortages of corn or soybeans for the coming year, given decent weather here in the United States, um, the farmers have to take that into account.
okay, that's great advice. Thank you both for joining us, and I invite everybody that is liking the content to subscribe and come back to the channel. Thank you, Jerry. Thank you, Jack.
You too.